we need to talk about buy-to-let landlords. The bottom line is, housing is a scarce resource. There's millions of houses, but millions of us. For now, the more important other bottom line is, buy-to-let landlords are greedy individuals that have bought up a good amount of this scarce resource. And really, we should be applying the same energy to these people as we did to those who turned up at petrol stations in 2021 to fill up cans, buckets and bags with petrol when it was a scarce and precious commodity amidst the shortages last year. Don't get me wrong, I realise that house prices have predominantly been driven by near zero interest rates for the past decade, but buy-to-let landlords have absolutely played their part in the supply side issues related to the housing market. See, most people who have somehow saved up 40k then go to a bank and say, I have a 40k deposit, how much will you lend me so I can buy my dream home? And they then spend the next 20 to 30 years diligently paying down that loan, with it having facilitated them buying their dream home. But the buy-to-let landlords are a special breed of greed. To them, 40k is really 4 lots of 10k deposits. They take out 4 mortgages instead, and buy 4 houses somewhere cheap, often up north, thereby reducing the supply of homes. They let these properties out using the tenant's rent to pay their mortgage. So they get a 9% wealth gain from the price of their asset rising, and on top of this, in cash, pocket the net difference from the rent of their tenants minus their mortgage payments. On average, it's absolutely been a positive difference over the past 10 years. For doing this, they think of themselves as entrepreneurs or investors in the process. Let's be clear, entrepreneurs are those who innovate and bring goods and services to the real economy and consequently drive economic growth. And investors are those who back that entrepreneur's idea, hoping to earn a return on their money for having taken that risk. We absolutely need entrepreneurs and investors for the economy to thrive and grow. But buy-to-let landlords are neither of these things. Housing and residential property plays no part in GDP, the thing that we're trying to grow. Only when new houses are built do these constructions contribute to economic growth. And absolutely, yes, let's build more and more houses to boost supply. But when these new build properties instantly get snaffled up by buy-to-let investors, you guessed it, the rent tenants are then paying these landlords, objectively speaking, does not contribute to economic growth whatsoever. So back to our case, in reality, our UK buy-to-let investors for properties have been yielding 4.5% annually. With the 2% borrowing cost being paid for by the rental income from tenants, that's a cash yield to the landlord of 2.5%. So that's another 10k in cash in a year. Cash that could be spent in the real economy at least. But we know what 10k in cash means here. Another buy-to-let mortgage. Buy another 100k house, and this landlord continues to build their property portfolio, leeching off the most basic of human needs via rental incomes and providing zero value add to GDP. They continue this process year after year. So let's map out this recycling over just an 8-year period based on the assumptions already discussed. That is, the landlord always buys 100k properties with 10% deposits and gets a 2.5% net yield each time after the tenant has kindly covered the landlord's 2% mortgage payments for them. The assumption is a fair one, that the landlord's mortgage payments are only paying down the 2% interest on the mortgage, rather than the landlord paying down any of the loan principal and wasting opportunities to buy more property. For reference, you can see my workings for what follows in this table. So, starting with the same 40k as the example, as we know, the rent from these 4 initial properties means they could buy another property after year 1 and a 6th property after 2 years. But by the time they have 6 properties, they get so much rent they can actually purchase 2 new properties in year 3, and another 2 new properties the year after that, and another 2 properties in year 5. This takes the total to 12 properties after just 5 years. Once they have 12 properties, the annual rent collected now means that in year 6 they can actually add 4 more properties to the portfolio and do the same the year after. In the 7th year, the 20 properties produce so much rent it's possible to buy 5 more properties with the proceeds. So that's a total of 25 lots of 100k houses after 8 years, having started out with just a 40k deposit. Now the year after, you could actually even buy 7 more properties with the rent from these 25. But let's just stop here for now and look back over the entire time period at what rent has been amassed. While the last 5 properties have just been bought, the properties bought much earlier and owned for longer have of course accrued more rent, which as we know covered the landlord's mortgage payments, with the net rent constantly being recycled into subsequent deposits on more property purchases. All the while, the properties bought at the start have amassed significant capital gains too, based on the annual 9% a year assumption. So the aggregate property portfolio is worth £3.4 million, with £2.25 million of mortgage debt behind this. It's just 25 times 90 grand of loan principal, because the buy-to-let landlord never cares about paying this down. So the £1.15 million gap between this and the £3.4 million consists of 250k, 25 lots of the 10k original equity put into the house at cost, and around 907,000 in capital gains across the 25 properties, mostly from the properties purchased earliest and owned for the entire time. Essentially, it's ridiculously easy to become a property tycoon, not because you're a genius or a savvy investor, but because you are willing to greedily buy up housing supply from others. This might seem theoretical, but it's absolutely everywhere. To be clear, I'm not trying to accidentally advertise this as a get-rich-quick success. It's a grubby practice stripping housing supply away from those that could probably otherwise afford to buy and live in these houses themselves. Good investments involve taking risks that ultimately boost the economy. Instead, buy-to-let so-called investors have generated returns associated with high risk-taking, despite seemingly taking no risk. But here's the good news. Seemingly no risk is not no risk. It's just a decade of near-zero interest rates making this practice viable. And with interest rates doubling mortgage payments now, this squeezes buy-to-let landlords too, not just those of us being squeezed on our normal mortgages. Remember, this landlord is highly levered. If suddenly rental incomes don't cover the cost of these mortgage payments, and eventually the banks even decide they'd like the principal they've lent back too, buy-to-let landlords could be in trouble. Let's be honest, if they've already been doing this for years, the house price inflation from which they've benefited in that time alone means selling off their houses cashes in more than enough to cover their debts anyway, should they need to. Even the predicted 20% drop in house prices undoes barely over 2 years of recent house price inflation, taking us back to only June 2020 levels. But nonetheless, it's a question of whether rents do remain at the same level while mortgage payments rise, or whether they somehow rise too, protecting landlords and allowing them to carry on doing this. When you look back further at the data on the previous chart showing average UK mortgage payments and average UK rent payments each month, and also compare this to historic rates, there is an argument that non-existent borrowing costs post-crisis drove the flipping round of these two costs. Before zero interest rates, UK mortgage payments were on average higher than rental costs. So with rates rising once more, there is an argument for the two switching back round again and mortgage costs rising above rents, much to the chagrin of buy-to-let investors whose cash cow disappears. But the power dynamic doesn't work this way. Tenants don't have anywhere else to live, and they clearly can't afford to buy somewhere. They logically would, given the monthly costs of doing so are clearly lower, so are instead beholden to the terms dictated by landlords. And unfortunately, you can already, indeed, sense the cash-rich buy-to-let landlords sniffing around the opportunities created by the wider crisis. Declining house prices could mean more demand for rent, they say. And crucially, they lick their lips at the opportunity created by people being unable to keep up with higher monthly payments on their mortgages. Banks repossess these people's homes when this happens and conduct a fire sale to recover what they can of what they are still owed. Usually in this process, these houses are snaffled up by landlords at a discount, so housing supply disappears. Home ownership drops. Essentially, cash-rich landlords can absolutely capitalise on these circumstances, adding even cheaper houses to their portfolio. So there is a clear need for government policy that protects normal people from the actions of these buy-to-let landlords, whose greedy actions, I repeat, add zero real value to the economy anyway. First of all, what can we do to prevent landlords hiking rents? And secondly, can we stop crucial housing supply being hoovered up into buy-to-let portfolios as and when repossessions occur?